What is going on, guys? Welcome back to the channel. I told you guys I would share with you my revised 2023 trading plan, just some rules that I'm going to tape to my monitor. I've heard some nice comments just to kind of refresh some things and twist them in a little bit of a better fashion, just so that it makes a little bit more of a statement and impact to me as well as I'm making my trades and going about it. So I'm going to go through this list with you. Feel free to steal any of them, steal all of them, or create your own. I don't care what you do as long as you do it, right? We're in a new year. It's a new you. You got a fresh account. You're starting over for the year. How good do you want to make this year? How profitable is it going to be for you? It's going to come down to your trading plan and how well you stick to those rules. So here they are for me, 2023 trading plan. Do not blow up your account. That is my number one rule. I don't want to see that happen to my account especially, or anybody else's that follows this page. It's a good number one rule to have. How often have you blown up your account? Probably several times if you're a newer trader. And if you're seasoned, you've blown up several in the past. I've been there. It sucks. I've done it several times until I learned do not blow up the account. So, number one, especially if you've got it grown to a position that you like it and you're trading daily and you can enjoy the markets, you definitely don't want to blow it up at that point. So I heard somebody say, I'd rather be rich than right. Now, rich, I'm not rich. I don't know. Rich is different in everybody's opinion as to whether it's just being able to do what you want on a daily basis, or if you are truly rich and, you can buy whatever you want. But rich means different things to different people. To me, I would rather be able to trade every day and know that I have funds in my trading account. So number one for me is do not blow that up. Number two, take profits when you see them. So, like I said, don't let a green trade go red. Sometimes they don't run as much as you wanted it to run. They don't run as far as you expected them to run, but they can still be green. You can still bump your stop loss up right away. And in order to do that, at 10%, if you watched my last video on showing how we can take a $500 account into a pretty decent sized trading account in under 2 months, what you would want to do is take 10% wins steadily day after day. So say you buy 3 or 4 contracts, right? Start scaling back at 10%. You can leave a runner if you've made that one free or whatever you want to do, but still bump that stop loss up so that you're making sure that you're at least securing 10% even on your runner and anything that you have in. But start scaling those out as soon as you see that 10%. Start pulling some of that off the table. That's how you're going to be able to grow that account at a 10% steady increase as long as you're taking those wins. I know it doesn't sound like a lot. It starts off small, but as you progress, it will get considerably bigger. You won't need to see such tremendous growth, I guess, as far as the percentage run goes, in order to actually have a sizable profit win at the end of that as you start getting a bigger account and taking slightly bigger trades. So at 10%, start scaling out some of the position and raise that stop loss up. Number 3, do not let a trade go against you, right? 10 to 15% down, cut those losers. Don't average down a losing trade. It doesn't often make sense. It's easier to cut it and re-enter on the strength, or say, hey, I was wrong, and you play it the other way. Number 4, wait for your setup and make the trade. So you get up early, you're marking out your charts, you're finding your supports, your resistance, what the overall pattern is. You're going to see how it moves. You can't guarantee which way it's going to go in that pattern or whatever you've laid out, but at least you have supports, resistance, and somewhat of an idea as to, the overall sentiment of the market once the market opens. And you just wait for that setup. Right? If you know where your support line is and you're playing it to the upside, then you wait for that support line. If you know where your resistance line is and you're playing it to the downside, you wait for that resistance line. Don't overtrade and don't take those random entries. Whenever you're in the middle at no man's land and you don't know and you're just guessing, hey, maybe it could go up or maybe it could go down, just be patient. Wait for the trade. You don't have to take no man's land trades just because you have some funds in your account. Number 5. Live to trade another day. This is very similar to not blowing up your account, but ultimately you don't want to even let that account get hammered so far down that you're just barely trading the next day. You want to be able to live to trade another day. So trading, lines on a screen, this is easy, this is fun. We sit here, we enjoy it. Maybe you do whatever else you want, in the meantime as you're watching the lines. It's better than going to the office or whatever type of job you have. I guarantee you would rather be sitting in your office chair watching your screen, trading those lines. And I mean, often you guys know you can quickly make more than you probably would at the office in just a few minutes to a few hours, as opposed to going somewhere and being a slave all day. All right, number 6, if you hit your daily goal, it's okay to stop trading. Just remember that. I don't know how much you want to make a day. You want to make $100 a day. If you hit that goal, awesome. You want to make $250, you want to make $500 a day, awesome. It's okay to stop trading. You don't need to risk what you just accomplished in that morning. You made very good wages. You made what you intended to come for, and you achieved your goal. You don't have to trade your entire portfolio. As that portfolio grows, don't feel like just because you have settled funds, you have to continue to enter trades and you have to be here all day trading. You don't have to be. Sometimes whenever you get over aggressive, you give a lot of that money back to the markets. Unfortunately, you get a little confident, think that you're unstoppable. You're right no matter what you do. We all know the feeling, right? You nail several trades in a row and you get really confident, and then sometimes the stubbornness kicks in and you just will not obey your trading plan. You won't obey your stop losses because you think that you're right. So just keep that in mind. If you hit your goal, it's okay. Close the laptop, walk away from your computer, go enjoy the day, take a walk, spend time with your friends and family. Do whatever you want to do. Doesn't matter. Make a YouTube video. Hey, that's what I do. That's kind of why I started it, because I'm like, what do you do after you trade for the first hour or whatever? Number 7, be right more than you're wrong. So this one basically says, your win to loss ratio, you got to be right. You have to be waiting for those setups. You have to be playing it smart and take those wins more so than the losses. If you're taking those losses more so than the wins, it's very hard to build your trading account. It's very hard to be profitable. So wait for the setups. That falls back onto one of your rules. So be right more than you're wrong. Work on your TA, see what you did wrong, see where it went wrong, see what you were playing. Were you risking too much? What was it? What did you not obey? And go back and correct it. That's all you can do. Don't chase the runners. So there's plenty of stocks that'll run every day. You wake up, you might scroll through Webull, see what's running on the day, what's up 100%, what's up 200%, what's up 50%. Don't chase the runners. You guys know what happens whenever you chase the runners. If you weren't in it, more than likely you missed the move, the initial move. It's probably going to come back and settle at somewhere much lower than where it would if you were chasing it anyway. So just be patient. Wait for it. Win big, win small, lose small. This was another nice comment that I heard last year. It's basically saying, doesn't matter if we win big or if we win small, but what you want to do is lose small. Do not lose big. When you lose big, it hurts. When the smaller you can keep your losses, the easier it's going to be for you to be able to make up that loss and turn it profitable. You just have to be able to control the losses. And then that goes into point number 10. The market is designed to take your money. Just remember that. The market's not here to make you and I rich day trading, swinging these calls in and out. That's not what it's designed for. Yes, it can create wealth over time. So people put their money in, but the big money, the institutions, they're the ones that are trading this day in, day out, making the serious money. We're just waiting 40, 50 years till we can retire, and then hopefully the market's at a point higher than whenever we started investing in the markets. So if you're going long term, it's one thing, but if you are trading, if you're day trading, if you're trying to actively make money in the markets, just know it's designed to take your money. It wants you to lose. It wants you to be wrong. It wants to be able to pay out the other players. So play smart, play responsible, and don't be a statistic. That's what I got for you guys. It's not financial advice, it's just my trading plan. Do what you want to do, but like I said, I want 2023 to be the most profitable year that you guys have in the markets. And I think this is a very important step to incorporate into your trading. I know it's not going to change anything that's in your portfolio right now, but if you actually obey them, it will change your portfolio drastically. So I hope you have a great day in the markets. I hope you have a great year in the markets. Draw up a trading plan, tape it to your monitor, whatever you have to do so that you stick to it. And I will catch you guys in the next one. As always, stay golden, people, and may your accounts stay green.